Hey, good morning. It is Scalping Tuesday, January 12th, 2016. Futures trading contains substantial risk and is not for every investor. Past performance is not indicative of future results. And hypothetical performance disclaimer, what I'm showing you on the charts that occurred yesterday probably is not going to reoccur tomorrow. Now, the markets. I'm looking at the 6Z because it's the only thing that's directionally moving all the way across, weekly, daily, 60-15, but I'm noting a little bit of divergence on this move, and I'm looking at VWAP up here as a likely place to re-enter this, or the developing value low. So I'll wait for my open at 720, get a test off of the support level, and see if I can pick up a trade up here and keep an eye on this divergence for the open. As far as a location to trade to, I've got a low volume node down here at 1.0170, and that would be for my directional trade to continue the trend. Because we have that divergence that I'm ever so mindful of, if price does whip around, I will have to wait for a better location to re-enter the market. These divergences are not set in stone forever. They just mean that price is likely to start a retracement. So we might get retracements across the board today, and that's why I call this Scalping Tuesday. Let's look at the ES. Pull that chart back up so I can show you what's going on with that currently. Give the charts a second to populate. And we hit my target from yesterday. A day late and a dollar short, huh? Here was my target, and look. A day late, a dollar short. Here's our high volume node. Here is a previous point of control, and that's the only thing keeping my little finger off the sell button at this moment as we speak. Because I'm thinking price is likely to come up in here and test this value high and this point of control, because it's sitting right there on that value high. So my target for today is moved up here. But with that said, we are at the 61.8, which the Fibonacci traders are going to be wanting to pound this down here. We are at the 25% high, which is not as good as a standard deviation 1 high, but that is the river of gold, and they call it the river of gold. I do. I think I'm the only one that calls it that, but maybe you guys will start calling my river of gold the river of gold. They call it the river of gold for good reason, and that's because you can make a lot of money on these turns in the river of gold. Look at this. Anytime you see a turn on the river of gold, you've got a lot to be happy about. All of these, look at that. This one was a little faker, but here was a good one. This one was a double bang winner. You got your turn plus your standard deviation 1 plus your river of gold. Boom. What a nice flush down. In the direction of the overall trend too. This was a triple winner. This was winner, winner, chicken dinner right here. How about that? This one too. So pick your spots. This one is likely to keep going, I think, to the level here. And then what that means for our trend, this is why I wanted to show it to you. When you pull up a chart and it doesn't give you your template, just hit the F5 button and the Bloodhound template will populate. And if it still doesn't populate, that means your days, just change a day setting on your data series. So like if you had 10 days, make it 9 or 11, and the chart should populate. There's something with Bloodhound and NinjaTrader. When you put a new market up, you sometimes have to hit F5. So you see it hit that river of gold value low again and is still bouncing, but I think we are going to continue to go up to those other levels. So this retracement, let me show it to you on the 60-minute chart, is heading to the 61.8, and the Fibonacci traders at this ledge right here, that's where that value high was in the point of control. This is a very high probability place to start selling. Or was it up here? Let me minimize this. My apologies. No, the level that I was looking for that previous point of control was 1948 up here. All right, this is right. Fibonacci traders are likely to pound this down here at this ledge, but we have this previous point of control and value low sitting up here. So if it does fake them out and we get this little 1, 2, 3 here, get up to 61.8, come back to 50, and then slam back up to 78.6 to get this ledge, then the market, this trend, this lag of the trend is over, and the market is just going to go sideways, and we'll have to range trade. But if this turns right here and comes down, it's a good chance that we could take this out and still reach the 1875. 1880 is a big target for a lot of these traders on the EMini, and they like to get paid. So I'm still not giving up on 1880. So, but it's not looking, well, it is. It's looking like this is stalling right here. You can tell it's just stalling out. So just be careful. What I like to do, as my market wizard Randy McKay says, just take the meat of the move and be happy with it. So with me, that means that I'm waiting for my candles to get on that other side of that 8 EMA before I trade for a high probability trade, and I'll just wait and go to a market that is trending in all in one direction, so I don't have to worry about it. So that's why I'm pulling up the 6C this morning, and I'll be trading that. I don't want to be trading that 61.8 fib, even though it is on a high volume node, and my river of gold. Just can't say. So just all my stars are not aligned for this one, so I'm going to pass on the EMini today and let the Fibonacci traders battle it out. So you guys have a good trading session. I'm going to flip out so that I can be trading my euro this morning, and I'll catch you tomorrow. Thank you. Bye-bye.